Good afternoon. Welcome to Bank Millennium 3Q22 results call. With us we have our usual presenters, Mr. João Brás, Chairman of the Board and our CEO, and also Deputy Chairman of the Board, Mr. Fernando Bicho. We will follow the usual pattern. First, we'll have a brief presentation of the results, and then a Q&A session will start and will be available for questions. Over to you, Fernando.
Thank you. Good afternoon. Thank you once again for having the interest on our bank and for attending this presentation. Today we are going through the third quarter results. I will start very briefly with pages number 5 and number 6, which summarize some main key numbers of the recent performance of the bank. On page 5, of course, the highlight goes to the significant growth in net interest income, which is driving the growth of our operating revenues, while at the same time covering also the additional costs, including some extraordinary costs that we had throughout the year, but we will elaborate on this more in detail later on in the presentation. Also, it is visible the impact of the provision for the credit holidays in the third quarter of this year, and also the continuation of the reduction of the FX mortgage portfolio, as can be seen on page number 6, as a combination of settlements with customers and also additional provisions for legal risk. Without these, we see still relatively good loan growth of 6%, excluding FX mortgage. And also, despite all the turbulence that we have been facing during the current year, the bank is able to continue a solid business activity, which translates, for example, in the significant growth of the number of active customers of 195,000 year on year, 54,000 just in the third quarter, and also an impressive growth in the number of online and mobile customers, reaching almost 2.5 million. We will start this presentation by providing update on credit holidays. When we made the presentation of the second quarter results, we had already, let's say, explained that the credit holidays, how they would be implemented, and we at that time had provided a range of 75 to 90% of potential take of eligible borrowers of these holidays. During this quarter, we created a provision of 1.42 billion zlotys for the upfront cost of the credit holidays, which corresponds to an assumption that 80% of the eligible borrowed amount will take these holidays for 8 months. The cost was booked in a separate P&L line, and at the same time decreased the outstanding balance of PLN mortgages, and that's why you will see a significant drop in the growth rate of PLN mortgages, which was due to this balance sheet impact. This assumption that we took to create the provision compares with the actual participation rate in the third quarter of 66%, although we should say that the September participation rate was higher than in August. So for the time being, we are keeping this provision, and we will review the assumptions when closing the 2022 accounts. Also, to be clear, the application for the usage of credit holidays is not a trigger of loan reclassification to stage 2, and we also believe that we are fulfilling the conditions not to pay additional contributions to the borrower's support fund. Moving to page 8, we show some key figures of the first 9 months. First of all, the significant increase in the net profit of the bank, excluding extraordinary impacts, by 127% year-on-year, supported by a growth of 75% of net interest income, while fees dropped by 2%. The adjusted cost to income reached a record low level of 32.6%, and the cost of risk in the first 9 months of the year reached 44 basis points over total loans. On page 9, we can see the evolution of the results of the bank during recent quarters. On the top right, you can see a clear improvement of the net results without extraordinary items. So our net profit in the third quarter would have reached 705 million zlotys if we would exclude extraordinary events, including credit holidays and provisions for legal risk, which shows the capacity of the bank to generate organic results and organic capital. And on the left side of the page, the evolution of the results broken down between reported and extraordinary items, and which translated in the third quarter into a loss of 1 billion zlotys due to the significant negative impact of the credit holidays, which exceeded on a net basis 1.1 billion zlotys. So it is visible also here that without these extraordinary impacts, this would be already the second quarter in a row where the bank would have shown a positive net result, in this case without the credit holidays, which means that in fact already in the second and in the third quarter the bank was able to generate a positive result even after creating additional provisions for FX mortgage, legal risk. In the second quarter, the extraordinary event was the contribution to the institutional protection scheme, and in the third quarter was the impact of the credit holidays. On page 10, we show the continuation of the positive trend in terms of the net interest income, which grew 8% quarter on quarter, and in the first 9 months of this year, 75% year on year, as a combination of continuation of increase in the average yield on loans, but also partially offset by the increase in the average remuneration of the deposits. Still, this translated into another improvement of the net interest margin by 31 basis points in the quarter to 4.79%. In terms of net fee and commission income, the evolution was negative. We have on one side a drop of 13% quarter on quarter, which was largely driven by a provision for return of insurance fees following recent approval of a new law in Poland, and this affected the fee and commission income in the third quarter by 18 million zlotys, and also brought down the year-on-year comparison, and now we are showing a decrease of fee and commission income by 2% year-on-year. So on one side, the improvements on for example, payment cards fees during the recent quarters was not enough to offset this extraordinary impact, and also the decrease of the fees for investment products due to the significant downturn of the market. Moving to page 11 on costs, I think we have been able to show good control of costs in an environment of very high inflation. So if we look at the costs, excluding the contributions to Banking Guarantee Fund and to Institutional Protection Scheme, the cost growth was 11%, both on staff costs and other admin costs. helping to bring down the cost-to-income ratio on an adjusted basis to 32.6%. Regarding asset quality on page 12, we continue to show solid credit quality with an impaired loan ratio of 4.5%. The cost of risk increased in the third quarter, as we were already expecting. We have a much higher interest rate environment, and this affected especially the consumer loan portfolio, where we noticed some increase of impaired loans and also increase in the cost of risk. Also partially in PLN mortgage, due to the fact that until the turn of the second and third quarter, we had some increase in the requests for the borrower support fund, which we treated as a trigger of impairment. This number has now dropped after the implementation of the credit holidays. And on the other side, we should stress the still very good quality of the corporate loan portfolio. We have not faced significant deterioration in the recent past, and this has helped to keep a very low cost of risk for the corporate loans portfolio, including leasing and factoring, of 10 basis points annualized for the first 9 months of the year. Also to add that during this third quarter we did not have, let's say, the positive contribution of the sales of NPLs that, for example, we registered in the second quarter. On page 13, regarding liquidity, very solid, a loan-to-deposit ratio of 81%. Regarding capital ratios, we had the expected impact from the credit holidays. So we had a drop of the capital ratios to 12.4%, the total capital ratio, and 9.5%, the Tier 1 and Common Equity Tier 1 ratio, which brought our ratios below the minimum required levels, where the gap is around 139 basis points for the Tier 1 ratio. So the driver of this was the significant provision that we have created for the credit holidays. And as we explain on page 14, we would, without this impact of the credit holidays, we would have shown a positive net result in the quarter. We have, in the meantime, launched the initiatives to improve the capital ratios, and our goal is to increase the capital ratios comfortably above the minimum required levels through a combination of further improvement of operational profitability and capital optimization initiatives, including the management of the risk-weighted assets and including securitization of loan portfolios. We are also temporarily not paying the banking tax, as we have launched the recovery plan, which also translates into additional temporary savings. And so this is the way we are planning to bring back, in a relatively short period of time, the capital ratios above the minimum required levels. Now, an update about the FX mortgage portfolio on page 15. So we continue the effort to decrease significantly the FX mortgage portfolio. On the top left of this page, you can see that the portfolio in Swiss francs was reduced by 5% quarter on quarter and 18% year on year. As a consequence, the FX mortgage portfolio, after legal risk provisions that are allocated to this portfolio, represents already less than 10% of our total loans, I mean the part that was originated by Bank Millennium. And at the same time, we continue to build the provisions for legal risk. In the third quarter, the impact in P&L was 447 million zlotys, so slightly below the previous quarter. And the balance sheet value the total balance sheet value of provisions against FX mortgage legal risk reached almost 4.9 billion zlotys. As you can see on page 16, this was the 6th consecutive quarter where we managed to reach more than 2,000 amicable settlements with customers in terms of conversion of the loans to Polish zloty. And also it was the 6th consecutive quarter where the number of amicable settlements was significantly above the inflow of new court cases. So we had 2,175 amicable settlements against 1,335 inflow of new court cases, which, by the way, was the lowest since the first quarter of 2021. Of course, the negotiations also came with a higher cost, especially because we had to face adverse market conditions, namely the significant appreciation of the Polish zloty and also a higher interest rate environment in Polish zloty. Altogether, we managed, with the increase of the provisions on one side and decrease of the book on another, the total stock of provisions for FX mortgage legal risk represented already 41.3% of the total loan outstanding, gross loan outstanding, as of the end of the third quarter of 2022. Moving now to the second part of the presentation regarding the business development. On page 18, we have some key numbers. A growth of PLN loans of 6% year-on-year. The number of active digital customers reaching 2.5 million. Some rebound in the business with companies and also a solid growth of deposits. Details are in the next pages, so starting with page 19. Overall, the loan portfolio on net basis grew 2% year-on-year, or 6% excluding FX mortgage loans. And as it is visible, the driver of the growth of the loan portfolio is still PLN mortgages, although partially affected by the creation of this provision for the credit holidays, which deducted to the outstanding balance of the loans, and also some rebound in terms of loans to companies. The structure of the portfolio continues to change with a gradual dilution of the weight of the FX mortgage portfolio. On customer deposits, a sound growth of 8% year-on-year, faster in corporate, 22% against 3% growth in retail. And on the other side, a drop in investment products as a consequence of the very adverse market conditions and also net redemptions in recent periods. In terms of business, the quarter was still good for consumer loans. In fact, a level of origination above 1.5 billion zlotys in the third quarter, meaning that year-on-year the level of origination is just 6% below the first 9 months of last year. On the other side, it is visible the deceleration of mortgage loan new sales, which dropped 36% versus the previous quarter, and overall year-on-year in the first 9 months we had a drop of 19%, and this drop will be probably even more visible in the fourth quarter. On page 21, we stress the continuation of the growing number of retail clients, which grew by 50,000 in the quarter and 190,000 during the last 12 months, which is also well illustrated by the significant number of growth of current accounts by 163,000 year on year. The digital change continues to be visible. We reached 2.5 million active digital users, a growth of 13% year on year. We have 2.2 million active mobile users, which is 18% above 1 year ago. And also 87% share of customers active in digital channels who logged into the bank on mobile devices. And final, and last but not the least, also recently we reached more than 2 million customers per month logging in to the mobile app. As a consequence of this digital development in the bank, the digital channels are becoming even more important in terms of share in acquisition of clients and also share in total sales. So, for example, during this third quarter, 81%, we had an 81% digital share in cash loan sales, apart from 94% share in sales of term deposits, and also already a high 35% digital share in acquisition of current accounts. And we had a record-breaking increase in the number of current accounts opened online by as much as 71%. The same progress is seen on page 24 in terms of BLIK payments, with 1.5 million BLIK users in 2022 so far, which means a growth of 30% year on year. And also, we are trying always to be in the leading pack of banks in terms of digital developments, and in this case, we were the first bank to start testing the BLIK Pay Later solution together with PSP. Further developments are illustrated on page 25. We would just highlight as an example that the mobile authorization in branches that was implemented 2 years ago has translated into having the possibility to conclude 10 million operations in the branches in this way, which has allowed us to save 250 tons of paper. The same effort of digital solutions is being developed regarding small business and corporate clients, as it is illustrated on page 26. And during this period, we were awarded by Global Finance magazine as the best integrated corporate bank site in Central and Eastern Europe. Page 27, Goody continues its progress, this time a growth of 111,000 app downloads just in the third quarter of 2022. Moving to corporate on page 28, we have some growth this quarter of corporate exposures despite a strong focus on optimization of risk-weighted assets, and also a solid growth of deposits. Also, we see a gradual improvement in transaction activity, namely in domestic transfers, a growth of 3%, and FX transactions, a growth of 19% year on year. On page 29, regarding leasing and factoring, some deceleration in the growth in leasing. So overall, still levels of origination higher than in the previous 2 quarters, but in the first 9 months of the year, a drop of 4%, while in factoring we had an increase of factoring turnover by 3% year on year. And finally, on page 30, we continue to provide additional solutions to our customers, this time also continuing to make available the new BGK Crisis Guarantees Program, which replaced the liquidity guarantees that were available until 30th of June 2022, and also implementing new loan products also in cooperation with the EIB group. So these are the most important aspects of our third quarter performance. Now we will be answering your questions. Thank you.